Hello, everyone. I'm Jean-Claude at Beyond Mystic, and welcome to today's edition of the Beyond the Charts. With me, of course, is Martee Hibbs. You can find him at bullshift2020.com. Martee, welcome back to the show. How are you, sir?
Hey, I'm doing well, JC. It's been a while. I think we missed last month. We both were kind of overloaded and just it fell through the cracks.
Fell through the cracks, kind of overloaded. Yes, a lot of things going on, but man, things are getting crazy. And I gotta say, I got a couple of emails in the last couple of days saying, "Hey, where's Martee? We're hitting the targets from the last show, and people are very, very interested now of what you got for us in store for us in the charts here for the next month because things are getting heated up at a big level, and I think we're getting maybe a culminaric effect of everything that's happening in the geopolitical world, and it's affecting our markets in a big way. So I'm very excited to have this conversation with you here today. Thank you, everyone, for joining us on the live show. I see you guys in the YouTube, Rumble, and Twitter chat feeds right now. If I have time, we might take questions from the audience here today as well.
Sure.
I wanted to start on this. You and I think this was 2 or 3 shows ago, we had talked about real estate, housing, and how that was on the verge of collapse. Here, finally, Canada is admitting we're in recession, even though they've changed the definition a couple of times. We probably were there last year. But mortgage delinquency rates rose by 52% in the last quarter of 2023. Like, that's big news here. And it appears to be getting worse here by the day. Where are you tracking on this? What do you feel? Do you want to extrapolate what's happening in Canada with what we're seeing in the States also right now? Let's get into the real estate market here a little bit and plot that out for the audience members.
Okay. So basically, we've been on the same mindset for the past couple of years. As I mentioned on my show in January, we sold our properties. We had 2. We had a summer home and our regular home. We sold them both in February of 22. And it had a lot to do with the charting because I was watching the charting and we had a typical, what we call a blow-off top.
Yeah.
That year, that 2022, if you go back and look, prices actually rose 30% that year alone. But at the end of the year, it had lost pretty much the whole thing. So people looked at it and said, that's no big deal. We're back where we were. No, it's not. When you get that kind of a move up and back down again on the chart, it's very significant. And of course, that's what the chart mentioned. I wish I could say something better about it. I think it's a situation where the person that owns their home, it doesn't matter what the price is in dollars. They're going to live in it. They're going to pay what they need to pay. Unfortunately, it's the people that are lured into get rich with Airbnb or, like get a home, buy a home and rent it out and make a fortune.
Right.
And all these kinds of things and flip houses, because the problem is, I think anybody that got in the beginning of 22, think about it. If the average down payment was 10%, that means the average person would need 150, 200 minimum. Oh, sorry, it's at 10%. If they're going with 20, which is the non-insured one, they probably need closer to 400,000 down. And at the end of the year, it went up that much and came back down. That means a lot of people actually lost their entire equity line or stake in their houses if they got in at the wrong time, right?
Yeah.
That's bad. Now, so again, my issue that I've always had is bureaucracy, government, red tapes, trying to get houses built. There should be no issue with a country as big as ours. And with the amount of immigration that they're legally allowing and not counting the illegals, they should have enough houses for everybody. But that's just the plan. And I believe, again, without sounding like a conspiracy theorist, the old word that everybody loves, no, I believe undoubtedly they're destroying this country intentionally. They're trying to steal the wealth from the people. And unfortunately, a lot of people are going to get slammed because, and I said on your show in January, I don't believe for a second that rate's coming down. Never did. They sucked everybody into that really seductive low interest rate at 1.5 with a variable mortgage. And I know a few friends, at least a half dozen, that kept saying, well, no, I'm in a variable because it's cheaper. And I'm going, please don't get in a variable. Either way, JC, the problem is different in the US because, well, we didn't follow their 2008 CDO debacle. We did quite well during that period. But the problem is we had the 5-year term, which is the typical or the average there. And with a 5-year term, even if you were halfway through your mortgage when this all started in 2020 or 21, when the rate started to pump, or 22, whenever it was, you'd now be up for renewal. And if you go and take a mortgage rate from 1.5 variable to a fixed 5, that's massive. Now, on top of that, you've got situations where you've got cost of food going up, cost of automobiles almost doubling in the same period.
Carbon tax going up just in a couple of days here in Canada, thanks to Mr. Trudeau.
Yeah. So the thing as we mentioned before, pretty much the same story. I believe what's happening are people are hanging on kind of by their nails in the sense that we'll get through this. And unfortunately, I don't think a lot of people will. Yeah. Because unless you're really well padded or you own your property, the problem is you're going to revert to that line of credit that's attached to your house. We talked about that. Yeah. Which of course doesn't have a fixed rate. Right. It's variable. Yeah. And that will bleed out, and then you'll get to a point where that's gone, and now you own everything on the house again. And they'll pull all kinds of stunts. They'll come up with a 35, 40-year mortgage just to bleed you out completely, whatever it takes. But unfortunately, I wish I could say it looks good. I just think it's going to deteriorate. And I think we're pretty much almost through the spring market now. That's the height of the market.
Supposed to be.
And they're saying a lot of people aren't selling. And I think it's because a lot of people might be in a position where they are either underwater already, which means they can't sell.
They can't take the loss. Yeah.
Right. Or if they sell, what are they going to do with the prices? Nobody wants to pay the new prices.
Where do you go? Yeah. Where do you go?
Right. Yeah. So yeah, it's unfortunate, but yeah, I think it's going to continue the way it's
going.
Well,
we're seeing here in Canada too, like the credit card debt is through the roof. So people are using already. They've used that part of that credit. Now they're getting into the home lines of credit also.
Exactly.
Let's extrapolate that though for the audience members who did get out in time, who perhaps put their money on the side here, hoping to at some point get back in. Do you see that in the summer? Do you see that in the fall? If you were to take a guess, how much more time do we have with the extend and pretend here with the home credit lines and perhaps these government schemes and banking schemes there to extend the mortgages? Are we going to see a big correction here in real estate anytime soon?
I believe we are. I believe it's going to start here, and it's almost like first man out, that kind of a situation where who lowers their price first. I think by the fall, it'll be a lot lower. I expect the average price in Toronto, which was at 1.4, which is the benchmark price back in 2022, to get close to 800 anyway, at least. And I think we're at 1.1 now or something like that. Yeah. I think we're only halfway there now. It's going to get crazy at some point, but unfortunately, it's like any other market. You're probably not going to catch the top or the bottom. Right. But I do believe you're going to be able to get a lot better deal after this fall, going into the winter and into next year, if you can, if you're looking to buy. But there's so many other issues that are tied to it. I mean, so many different things. Like, will the bank start loaning the money? Will they do a reassessment on the property? Say, well, you might want to pay that for it, but we don't want to loan you the money for that amount.
Right.
We don't feel it's worth it. Right. So that's usually what happens. People say, well, when the market drops, I'll buy. Well, it's not that easy, because when the market drops, the banks start to get hurt. If they get, as we saw, defaults, they're going to clam up and stop loaning.
And they're already signaling the liquidity issue right now and tightening of the loan portfolios.
So all the holes are kind of plugged there. It's really tough, today to get ahead in almost any market. I know here in Canada, one little thing, getting off track for a second, I deal with Kraken, which is an international crypto company.
Yep.
There's only one account I've got now. Well, they notified me a month ago, coincidentally, every Canadian now is not allowed to use leverage on Kraken. Now people go, what's the big deal? Well, the big deal, like being a hedger, that's what I've done for so many years. What I have to do now is if I decide, let's say, for example, I think Bitcoin's going to 80 and I want to take some profit off the board because I think it'll drop. What I would do is do a paper contract, use 5 times leverage, short the contract at 80. When it drops to 70, I buy it back. I've made a paper trade, but my crypto is over here in my cold storage wallet. Not anymore. If I want to trade crypto, I've got to take it out of my wallet, risk sending it to the exchange, risk getting it tied up, because if the exchange, as it does, gets locked up when things start getting active, and
gets hacked, or the weak points. Yeah, we know.
Yeah. So there's a lot of this stuff going on. So no, yesterday or day before yesterday, I think it was Saturday, there's a company in where I live. It's called Global Currency Exchange, and I've always dealt with them because they give pretty good rates. Because I dealt with the farmers for years, and I did a lot of their currency exchange, I had a special rate with them. It was a good rate, maybe a half a point over Forex.
Right.
And I got a letter from them, and it was a letter that was no signature on it saying, we don't want to do business with you anymore. So I phoned the manager, and I know her quite well. And she goes, are you serious? So she looked in my account. She goes, yeah. She goes, you know what's funny? We've had a bunch of these letters lately. So what's happening? Same thing. They don't want money flowing around unless they know where it's coming from. And they basically are saying, we don't like what you're doing. And they don't even know what you're doing because there was no response phone number. There was no contact. There was no signature. It was a generic letter saying, we're not doing business with you anymore, because the banks obviously want to scalp you with their 3% on either side of the exchange.
Yeah.
Yeah.
Crazy.
Yeah.
Treacherous markets. Let's look at the debt market here. I had something up on the screen here. Let me bring this up. Interestingly enough, we can get into maybe the dollar segment now, but let me see if I can bring this up. For some reason, I'm jammed here. There you go. Okay. The CBO director warns that debt market meltdown with the U.S. debt is unprecedented. Look at the trajectory right now. We've talked about this in the last couple of shows also. Is this an expanding chart right now, or do we see any corrections happening? Do you see geopolitical events that might change this, or are we on this one track trajectory here to this? Go ahead.
Well, my belief is they meaning the people that run the show. Okay, put it plain and simple. Don't beat around the bush.
Yeah.
It's all planned. And the idea is that we talked about before, if you have a credit card that's got $50 left on it, you're going bankrupt, you might as well go have lunch.
Yeah.
So money, it doesn't mean anything. It's digits. And if we're going into this new system that they're trying to create with CBDCs and things like that, they are going to use whatever they got, because it doesn't matter whether you put 10 digits or 20, it's worthless anyway. And the big thing, though, is, JC, I've always wondered, they've always been successful historically in the past for decades and generations, that they've managed to move us from from cash banking into debit cards and credit cards. Very successful. But with the awakening thing that we're seeing happening today with social media and everybody else out there realizing what's happening, I just keep thinking there's going to be a misstep somewhere along the way here. And it could be pretty disastrous, because you think about it. If you are part of the corrupt system, let's say these judges or whatever are being paid off, let's say, if they are, wink, wink, nod, nod, if the currency crashes and really implodes to the point that it's worthless, nobody wants to accept it, you're going to have a situation on your hands.
Right.
Or these people are going to say, hey, I'm not getting paid anymore. I'm going to start writing a book or talking or whatever, because they can't afford that. But they're trying, I believe, to bring us into a transition where they're going to transition us into this, where they'll do away with cash, obviously, first.
Right.
And it's a delicate situation. If anything happens and it's not supposed to happen, it could get really strange for a lot of people.
It's getting strange. What was funny about that article was like, it's almost time to panic. Well, I think the warnings for that were a long time ago. It's time to prepare if you haven't already done so.
I mean, that's a powerful chart. The only thing that looks like a cocoa chart to me right now.
It
goes up straight one direction.
Never mind gold. Cocoa is going to be 10,000 an ounce here soon. That's absolutely crazy. Let's look at the S&P. JP Morgan says that stocks are so crowded they may crack at any time. They're expecting here maybe a plummet of 20% by the finish of the year at 4,200, warns JP Morgan. Do you see that in the chart? Do you want to bring up the S&P?
Yeah, I will. Actually, let's do that. Let's look at the chart. So present video screen share. All right. Screen share. Just click screen share.
Select the window or tab you want to share. And
then hang on a second. Let me get the tab. We went through this before. Here's the tab. So it's
select your trade view window.
Oh, right here.
Yeah. And then at the bottom, share.
Okay, got it there. Hey, I'm getting good at this.
Hey, there you go. Okay, there we are.
Right, so we're looking at, you want to look at the S&P, correct?
Sure, let's do that.
All right. So here you go. The S&P now.
We started with some bad news, but there's silver linings for people who might be hedging and all of this.
Yes.
So we'll get to all that here in a second with gold, silver, and also crypto. Bitcoin's acting up
so
again.
Here,
Martee was on track of this a couple of months ago, so it'll be interesting where we go today. So let's look at the S&P here.
All right, so it's the S&P. It's the broader based. Everybody knows it's the 500 index stock, which is a broader based index. Now, back here is where we say there's going to rip to the upside. We had a funnel. We have it on the other charts, but I took it off because we hit our target. Now, our target just means we're in the zone that we would say, okay, guys, this is getting tired, and we don't know what's going to happen. It could either from here start a correction back to around this 4,800 level, or it might continue to go. Now, there's 4 charts I follow: the NASDAQ 100, S&P, and the Dow. So this is the S&P. Let me just show you this one first. They will all pretty much go hand in hand.
Okay.
The key difference is, of course, this is a broader base index. Dow is the 30 stocks. Now, here's the Dow. This was the funnel we said was going to run the funnel, which means basically in this time frame, it's going to rip. And it did exactly that. We're past the funnel, and it's still ripping. Now, we have one more target, JC, and it's just a bit above here. It's up around the 41,000 level.
Okay.
And we're getting to a point now where we're getting some short-term sell signals, but I don't really trust them yet. Now, there's a couple of things I want to talk about. Let me just show you the charts first. This is the Dow. We're not quite there in the Dow. The NASDAQ, this is the composite, the broader base one. We're not quite there on that one yet, but we're getting close. There was the buy signal down here.
Right.
And then we go to the NASDAQ 100. We are there on the NASDAQ 100. So we're there on the NASDAQ 100, which is the top tech stocks. We're also there on the S&P. So what does that mean? It means it's basically run its course, but it doesn't necessarily mean it's going to crap out. So what I wanted to show here to say is that we're coming into this weekend, and I have what we call cycles on our charts, which are pretty accurate. They kind of tell you when the chart is running out of steam. It looks like we could have a little bit more time on these charts here. However, I am expecting possibly a spike to the upside before they actually reverse. There's a possibility we could get a spike here, but they are tired and they're overextended. Here's the key. Most people don't trade this market. So when I say that, what I'm saying is the average person is not in here buying these stocks. These are basically funds, traders like hedge fund traders that put this together as a package and sell them as funds, like people like the big banks and the big exchanges. And generally, they're all on the same page. And this is why most people you won't find in here, not many people would come in here. Think about it. You can buy it here, or you can wait 6 months and buy it 30% higher, or you can wait 6 months or 3 months and buy it 30% higher. The average person doesn't have the nerve to do that.
Right.
Now, these fund managers, unlike what a lot of people think, follow technical analysis. When they get the signal, the algos or whatever they're running on says sell, you'll start getting selling by one big firm. Then another firm may look at it and it'll trigger their points. And all of a sudden, they're all selling because they're all in the same boat. So what I am expecting is when this lets go, now it might be this weekend. It could be May, June. It could be later in the year. There's no way yet because I don't have any signals to say it's a short.
Right.
The signals are saying it's tired, it's overdone. Everybody knows it is. So what I'm expecting is when it breaks, it's going to be a massive break. And I'm talking to the tune of 10% or more of the entire exchange. So in this case here, if we were to drop from 18,000, we could drop 2,000 points, which is down around the 16,000. However, it may last 3 or 4 days, but I don't think it's going to stay down there. Okay. As long as this make-believe dollar system is in place, they'll do the same thing again. They'll turn back around and they'll pump it back up again until it no longer works.
Why don't we get into that then? Let's look at the dollar.
Okay, sure.
What's the dollar now as well? Yeah.
Okay, so here's the dollar. Now, the dollar is, we talked about the last time, it's got a beautiful formation, very bullish, but this part here, we said we had to get through this area here, this 104. Well, we got through it, as you can see here. Move it over. Got through and it closed back a bit, but it still looks good. So here's the next key point. We're basically in this pattern here. It's a holding pattern to decide, in my opinion, where we go financially with regard to the euro currency or the dollar. And it's the same story here. So because what happens with, we believe from what we're hearing is that we're going to see a big ramp up in the situation in Europe.
Yeah.
Okay. Secondly, the Middle East as well. It should probably all basically flare up around the same time. And that's any time between now and the summer. And if that's the case, there could be danger that the euro currency could be dislodged and it could be in trouble, especially if there's anything with movement through Europe to defend the actions of what's going on right now with the what happened in Russia there last week. So if things start to unravel in Europe, that money we talked about that is personal wealth and property of corporations and people, number one priority is to preserve it. And in that case, what we look for is to come here. And in that case, you're going to benefit from, again, we just showed you the stock market, possibly. Not saying it's safe, but people think it's safe because they want to put the money where the returns are.
Right.
The dollar, the treasury bonds of all things, the safest safe haven that they've always had for years. When the markets fell apart, money went into the treasuries because the government is the safest money that you can get, in case you didn't know that. Right now,
out of full confidence of the government. Yeah.
Once we get through here, our next major target is this top. If we can get through this top here, up into this funnel, this red resistance level, now it'll pull back. But if we get through here, to me, that's game on, that we're going that way, which means the dollar is going to start and eventually it will scream and we will see possibly new highs before the end of this year in the dollar. Mm-hmm. And at that point, I believe that's when things will come unhinged, and that might be the last hurrah of the dollar. That's how I see it playing. But right now,
let me show you an article from earlier today on Zero Hedge. Experts expect a financial crisis in Europe with France at the epicenter. This was interesting to me because you just mentioned the euro now. And there's also some astrological alignments that suggest that the euro is in bad shape. It's due for something weird happening here also at that level. I'll see if we can get some more details on that. Yeah. But if that's the case, and we're starting to see some issues with the valuations of the euro, how does that tie back into your chart here, as you were saying?
Well, that would be exactly it, because the euro is, they call it a project or a what's it called? There's a word for it. But basically, they take these countries and they kind of stick them together and they make this currency for them. And half of them don't have much in common with regard to their GDP or anything else.
Most of them didn't meet the criteria. The guys, what was his name? Mario. I don't want to say Bullshi. Mario Draghi.
Yeah,
he was instigator at making Greece and all these other countries fit into them, even though they didn't fit at the time. And now we have
a little bit like what the BRICS is trying to do now. It's a project or an experiment, right? So here's the deal: if Russia, and I personally believe Russia is not finished. I think, unfortunately, they're going to have their day in the sun, so to speak, in that they're going to look for retaliation, and if they start to move, because it seems like they're just constantly being poked and prodded for whatever reason. I'm not taking sides, guys, so don't get it wrong. I'm just telling you what I see.
Yeah,
I think they're going to poke them once too often, and you're going to see a movement through Europe. And if it does, the minute they step on the ground and take control, that currency is no longer the official currency there, and it doesn't exist in that country.
Right.
So this could cause a lot of grief for people that are trying to preserve their wealth, just like the North.
But hold on, Marty. I have these exact conversations with friends, and their first reaction is like, "Wow, that never happened." JC, come on, that just won't happen. In their mind, it can't happen. I'm like, wait. If you go far back in history, these things happen over and over and over again. But when we look at the age of the current investor, in their mindset, this just cannot happen. What do you say to that argument, so that they can at least leave that opportunity of that possibility for them to plan their trade and to trade their plans, knowing that could indeed and might indeed happen? What do you say to them?
We have the same problem here because, again, we're looking at it from a micro perspective. Think about this. Everybody we talk to today, if I said to you today, where's the price of gold? What do you automatically do? You say, oh, it's $2,200.
Yeah.
Why $2,200? Why? Because you're equating everything in our life into dollars.
Yeah.
Just like if you're in Europe, you're equating it into euro. Now, the problem is if you're a 500-year-old guy that just happened to be hiding in the mountains and survived, he'd go, oh, this dollar thing only came in 100 years ago. Before that, we were using coconut shells or whatever else. So the big problem with the transition, I believe, is you've got to get your mindset changed so that you're not relating things to dollars. Like, for example, when you say the price of gold goes up, to me, what I see is the dollar's value has gone down because it needs more of those dollars. Now, normally what happens, and most people that are following the charts or following prices, Well, notice that if the dollar goes up, gold goes down. Why? Because it takes less of them. They're stronger to buy the gold. And so generally every day it's boring. Month after month, we're looking at the chart saying, oh, dollar is up, gold's down, because all you're getting is an equation relationship between the two, unless there's some fundamental underlying issues going on. So for example, if wheat went up because the dollar got weaker, or wheat goes down because the dollar is stronger, that's fine. But if we ended up with a major drought in the Midwest, all of a sudden that dollar thing goes out the window. People go, oh, there's a shortage of wheat. Now we have a fundamental reason why the price is going up, not just the currency exchange.
Right. Similar to what's happening with chocolate there.
Exactly. Yeah.
Right,
with cocoa. Exactly.
Yeah. Cocoa. Yeah. Wow.
Right. Yep.
Okay. Well, speaking of gold, let me just change charts here quickly. Spot gold climbs to a fresh record high here today. This was a couple of minutes on Zero Hedge. A lot of people are saying gold, the everything hedge. And we're seeing also moves by HSBC to perhaps tokenize or bring gold to a digital format here too. This is interesting here, fresh new news. We'll get into that maybe in the crypto segment a little bit later on. But let me bring up your trade view here. Let's look at gold. You called it the last time you were on the show. Let's see where we're at today and perhaps where we're going here in the next couple of weeks.
Am I shared okay? I don't see my...
Yeah, we see it on the screen.
Okay. So the last time we spoke, we said it pulled back here. We did touch the box, and the box, now for anybody that doesn't know what the boxes are, my program doesn't run on this computer. This computer is running TradingView, which is a free platform for anybody who wants to use it. I have the upgraded because I want a few pages, but it's free. Basically, the Oracle, which is my, like an algo that was created many years ago, is what I run. So in this case, what it'll tell me is it'll give me price points, time points on my chart. So I have to translate it some way on here. And what I've learned to do since I worked with Dick is I took the numbers and I plotted them on the chart. Then I drew a box around it. So the box generally represents the bottom entry. The top is the high point. The left side's where it starts, meaning where we expect to hit the target, and how far out these numbers are good for. And of course, it changes because as we get closer, this is what happens here.
Get more precision with the
targets get more precise.
Yeah.
So with gold, I am looking for a move close to this dotted line, somewhere close to 2,300 before it runs out of steam. And the last time we were here, we said the main thing here is we got to get through this barrier. Once we do pull up, get a pullback. I was thinking we get a pullback to the support area, which used to be the resistance, but we didn't, which means it's very strong. Yeah. But I think there's a lot of risk going on right now where people are genuinely nervous with what's happening. So what we're seeing for the first time in probably years is the dollar going up with gold, which is very unusual because usually it's the opposite. It's almost mirror image unless there's fundamentals underneath it. And so right now it looks quite strong. I do think we have higher prices. The highest price the Oracle will spit out is around $3,000, and that's much later, possibly towards the end of the year. But our next major target, once we get through here, we pull back. This is going to be still major support. I think the floor is in at around this $2,100, $2,000 level. Going forward, that's our floor. But I do have targets up around the $2,500, $2,600 later in the summer, which if they get met, then what happens is the Oracle takes the time it took to do it, the volatility, the price movement, and then extrapolates it out to give you a new target. So I'm happy with the gold call. I think it looks very good. We're at our target. We said 2250 on your last show, I believe. But I said later this year. It's a bit early. Yeah. But we're at 2240 right now with a 2246.
So I think as for the last show, we hit the target already in gold, and we're almost there, if not close to it in silver also. We'll get to silver in a second. But you mentioned the sentiment. People are generally afraid, and it's keeping this up maybe more than you would see. I saw Costco just a couple of weeks ago introduced that they were now they're selling gold, but now also selling silver, and they were having issues just in the last couple of days running out of those silver eagles. Big Spirit also did a video on this too. So there is a big sentiment here. You're right. People might not be educated to read the charts, but they know something's wrong, and they're trying to hedge here, whatever is before them. So that's very interesting.
Yeah.
Do we want to get into silver now? Do you have more on gold?
Yeah, sure, we can do silver. Yeah, so it's the gold pretty much. Gold to me, like I think it is classified now as a tier one asset, which means it's basically on the books as cash, which it
Yeah.
never used to be. It used to be like 50%.
That was
So
announced by the biz. Remind us, was it in 23 or 22?
I think it was last year.
In 23, yeah.
Yeah,
Yeah.
I think I can't remember. I'm
Yeah.
old.
I have the chart somewhere else because we
Yeah,
keep talking about this, but for the new audience members,
yeah.
this is relatively recent, and it was a big deal, but it wasn't really announced as a big deal in the mainstream media.
No, not in the
It,
beginning, but they
it's
want to use it
yeah,
as their assets. Yeah,
exactly.
yeah. All right, so silver. When we're on, I'll tell you exactly where we are. Right here. You see this part here? Uh, February 13th. It must have been this one. January. Right here is where we were on your show. And this is the green box means it's a box that I put in there to say, in my opinion, not trading advice, this is an area I'd be buying silver. So you buy it in the green box, you sell it in the red box. There was a small green box. We took it out, but it hit there. Beautiful trade, reversed nicely out of this one, came back into this one. And now our box on the upside. And the last time we were on here, we said our target is 27 to 29. So $28. And I put the target just to be funny because with our own clients, he says, how precise can you be? And some of our clients. So I said, okay, let's try it. So we put a target here with a date on it. And it's right around the $27.80, $28 range. And I still think we're going to see that. But we were in here when we did the last show with you, and we said we're looking for about $28 by the end of summer. So we still got a couple of months. It's checking back a little bit. But yeah, I think it's quite likely that we're going to see 28. And then later in the year, we do have a big target up around the $35 level. We said that last time we were on your show as well.
Right.
So it's behaving very nicely. I like it. But I just want to go back to your point you made. And I did say this the last time, and I just want to cause some commotion here. When you say about Costco, the problem that a lot of people, I don't like what they're doing. A lot of the stackers are getting caught up in this idea of shortages. The silver itself does not have a shortage as much as the token that people are trying to buy. So that's why you saw last year where Eagles at one point were $18 over spot.
Yeah.
And okay, so you take a silver Eagle, pure silver, 1 ounce, 4 nines, and you take a silver, what they call a round, 1 ounce, 4 nines, maybe $1 or $2 over spot. To me, it's silver is silver. Okay. You're not paying for the numismatic value. So what you're seeing there is a big rush to buy Eagles because that's what people want in the US. Canada, they want the Maple Leafs. It had $4 or $5 premium. And then the rounds are $1 or $2. But don't get caught up in that, guys, because I mean, silver is silver. If you're going to sell it for the silver content, don't get caught up in an $18 premium because it's a shortage at the mint level. So the mint's behind, which means they can't get caught up because of the demand from the average store or shop. Right. So be careful with that when you see these huge premiums. It just could mean a temporary shortage. And that's why it swings so widely. Went to 18. Now I think you can get them for like, I don't know, $4 or $5 or less on the Eagles, whatever.
Right.
Yeah.
Yeah.
All right. So that's silver.
That's interesting. So your target there, what was it? 27.80?
Yeah, about right in the middle, between 27 and 29 is the target, and that's the one for the summer, before the end of summer. So
the reason I mentioned that,
we were right here. We were we were in the box actually, because I remember I looked at it earlier today to see what we did, and it was right here. So it's moving very nicely to the target.
The reason I'm asking, if you look at the Shanghai silver versus the COMEX, the arbitrage opportunity, Shanghai selling at 27.35. That was earlier here today. So I'm like, okay, so technically the COMEX is not, but there is an opportunity in the world right now where we're getting close to that 28 already. Can we talk about this arbitrage opportunity here? Are you of the mindset that perhaps the control mechanism or the pricing mechanism here is moving east? We've heard also that the LME is moving some of their storage facilities to China. Here we have this big arbitrage opportunity, and they seem to be slowly ratcheting it up. And this difference here, the delta between the COMEX and Shanghai, is increasing.
Yeah.
Is that going to cause... Well, I believe it is, but that the break at some point between the price in the East and the West, are we close to a breaking point where suddenly we're no longer controlling the price mechanisms here, whether that's the LBMA and the COMEX? Are we close to that event? What's happening in your view when you're seeing this here?
Okay, so we've been saying this forever, that are we close to it? And obviously it's been going on for, as you know, everybody on YouTube has been saying it for years, and it probably could be. But here's the deal. We talked about it before. If you're a card player with a group of friends and you're the bull in the room and the guy with a wad of cash, you're going to control the show. So people have to understand there's different silvers. There's silver in the COMEX and LBMA or the LMA, London Metal Exchange. The problem is we're talking about paper contracts. Anybody can create a contract. Anybody, any bank can go in and sell $1 million for the silver. They don't need silver. All they have to do is honor the contract. And the only commitment to that contract is when you short a contract, you have to buy it back. That's your only commitment. Or you have to take delivery or deliver. That's the only other option. And most people don't. 99.9% of people that trade the markets, like I was talking about with Bitcoin, they only trade paper back and forth, and they take advantage of it. So the problem is when you get a bank that thinks it's a bit too high, what happens is you got orders. So say, for example, today we're at $25 on silver. You got people in there today saying, oh, if it comes to 24, I'm going to buy it. Another guy say, if it gets to 23, I'm going to buy it. And then you got a big fund saying, well, we're trying to buy it at 21. We think that's where the support is. So all these orders are in there to buy the silver at these different prices, correct? The bank comes in and says, sell 10,000 contracts. Boom. The market drops because it's all selling. It keeps hitting the prices and everybody gets filled. Now, the problem is with the little guy, it doesn't stop. It keeps going and he gets in and back out again because he gets filled. And then he stopped out because he ran out of money because he's trading on leverage. Right. So unfortunately, it is a very corrupt organization, the market itself, and it's just done legally. Legal corruption, I call it. So the thing is, though, with the arbitrage, like people have to understand with the arbitrage, in the case of metals, there is an amount that you're not really looking at there, and that's to do with storage, insurance, transportation. So if I arbitrage and do a contract between, say, let's say a physical contract between COMEX and London, there's costs involved. Right. So it's not like a currency arbitrage where it's just
you're not moving paper at this point. You actually have storage fees, moving
and then
fees.
You're talking about different. So there will be. It's just like even here when the grains, like if you look at the farmers, a farmer in one part of the country in Midwest may have what they call a basis cost of like 15-20 cents over the spot, and a guy down the road like 200 miles, he has to include the price to be able to ship it to where he lives. Yeah. So there's an opportunity with them as well. The same idea, the arbitrage, right? To see, and we had arbitrage years ago, a couple of years back, that was really significant on Bitcoin, where you get these exchanges because they're independent. Well, do you remember? Like I remember a couple of times, one with Kraken, because I was on there when we could have bought Ethereum on a big dump when it went to $700 down from like 12 or 13, but it was only on Kraken. Right. So if a guy was swift enough, I mean, you'd have to be pretty swift to be able to buy it at that price and at the same time sell it on the other exchange and capture the difference. But that's not for the weak at heart. You gotta know what you're doing to get into that stuff. But
is there also an underlying thing here where perhaps silver is moving east with this arbitrage, or is that difficult to ascertain at this point?
Yeah, I don't get too much into that part of it. All I know is, like with me, I use the contracts for hedging only. So if I have silver, then I like the price, I'll sell the contract, and if it keeps going up, I'm covered. I got the metal. Right. And if it's wrong and it comes back down, I don't like it, I'll step off the train, so to speak, where I got on. Right. For example, like when Bitcoin comes down the road now, we'll talk about that in a minute. We're going to show you the chart, but when it gets to a level like right now, when I get there, let's move the chart. You want to go to Bitcoin now from silver?
Yeah, let's do that. Let me just bring this up here. Bitcoin Cash rally's also here.
Bitcoin Cash, doing very nicely.
Yeah. Bitcoin itself was also at 70K here. This was on CoinDesk. If you want to read that, we had a bit of a pullback in the last week or two. A lot of people.
Are we talking about which one?
Well, let's get to Bitcoin first here before we go to BTH. Okay. Yes. Let's bring up. Let me see.
Absolutely beautiful. This is what we had, and now at the point when we were in here, this is a funnel. We got a beautiful move up into the funnel. Our target was 72 to 74. That was our target. It got to 73.6, something like that. Yeah. At this point, we said it looks like it wants to correct. It's a short-term cycle that is going to expire in 3 or 4 days. Now, the short-term cycle tells me that there is a chance in the next 72 hours that we could have a spike, and that spike could take us into new highs on Bitcoin.
Okay.
The only problem with it is this. It could be the fake out or the washout where you run the stops, people jump in, because a lot of people buy on strength. They're mostly professionals.
Right.
But if they do, what happens, anyone that's shorting this puts their stops above here. They hit the stops, and that may be the top. So I don't want to see it run up in the next 48 hours, because I think if it does, we're in for some pain for a few weeks or more to get back and regroup again. And we're probably heading, our major support is down into this mid to low 50s level. And there is a chance that we could end up there, but I don't think yet. I think we're going to try the upside. Our target on the upside is
so would you rather see a little bit more consolidation over the next couple of days to give you more strength?
Yeah, I'd rather see it stay below the top and not run the stops here and just consolidate and pull back, because we have two cycles. We have a short-term cycle which expires this weekend, and then our long-term cycles actually goes out to June, which means we have potentially a couple of more months that we could have a big run in Bitcoin. Right. But the short-term cycle is it looks like it wants to, and I think this formation is telling me we may pop and we may take this top out and pull back, and that's okay. But like this funnel is here because I thought earlier that we could have a big pump up into the mid to high 80s and then lose it.
Where's the 100K in that? There's a couple of guys talking about
100K is right around here. That dotted line is around 100.
Okay.
Now, I drew a line across here just for your people so they could see it, just to get an idea of the projection from the old top that we made before. And it comes in right at the top of the Oracle numbers. So I don't think we're going to get there, but that says 112. I think we're going to have trouble just shy of 100. It's a magical number because everybody likes the big round numbers. And people get scared when it gets that close to go, oh, let's get out before the 100. And they start bailing. And it's the same with most targets. Like if you know something, you think it's going to top out at the old top here, then you'll get out just before. Now, there's an example, JC, of what I'm talking about. You see this pump? Went up into new and it lost it. That was it. Boom, down it came. So you got to expect volatility, and we're going to have it, especially in Bitcoin. But I'm very bullish on it longer term. I do have targets up around the 125, 130 level on my other charts, but they're not projected on here.
Okay.
But right now, short
term.
That's
for the 125. Is that still for this year?
Maybe the end of the year. I don't think it's going to be, it's not going to be in this cycle. We're going to have a big correction somewhere between now and the end of June. I don't know when, but I'm looking for a minimum of $20,000, $25,000 correction. And I'd rather see it from the mid 80s.
Sorry, we're going from 80 to 20, or you're coming down to
no, coming from 80, dropping 20 grand down to about 60 or 55.
Okay.
From there. So from here, if it corrects, we still have major support 50 to 55. Because that a couple of times come into play over the past few years with us. It was major support or resistance at one point and major support at the other point. So that's a good area. If we correct now, I still think we're going to have a day or two challenge this top. We're not finished yet. The next day or two, we should probably check out that 74,000 and see what happens. We'll give that a few days. But if it corrected from here, I'd say great support in this low to mid 50 range. If it gets back there, I'll be looking at buying more. I don't think it's over by a long shot.
Cool.
Most of the alts are doing well. Believe it or not, Doge. Look at this.
I saw that.
That's our target on Doge right there. And it's almost there. So what that means for our clients, my clients on our site, is they know that if it gets to a target, what Martee is saying is, hey guys, if you got a good profit, don't be greedy. It's going to trade. It's going to trade both ways. Good spot to take either some of it off, or if you want, all of it. But it's a good spot to take something off if they hit some of the targets, because they've been pretty good. The targets have been pretty good.
Are you looking at, I'm curious about two other coins here for our audience members. XRP has been contentious for a lot of our viewers, and also Litecoin. Let's do Litecoin first, because Cliff had Litecoin in his webbot data for a number of years, being the belle of the ball in the spring. And we're seeing some activities here lately in Litecoin that could suggest that, maybe we're going to a higher a position than we are. So let's look at this chart here for Litecoin.
Okay, so here's the day chart on Litecoin. Now, what I had said earlier in the year, I was not impressed with it, because normally Litecoin, the way it performs, it has a way of doing it, it usually plays catch up. It'll lose 80-90% of its value. Bitcoin starts to really pump and move. Litecoin catches up, and it really does catch up. This case here,
like that sloshing effect.
When it failed here, I basically on my show, I said, look, guys, I'm getting out of 80% of all my Litecoin because I have a fair bit from trading back and forth. I use it for swapping.
Right.
So what happened here is I got out and I said, I'm not buying back in until we get through 75. Well, we got through the 75 level right here and it ripped. It came back into our buy zone. And now there's overhead resistance, but we have another target up around 125. And I believe we have an ultimate target up around $400. It's not on here. But yes, I believe it's starting to show life. I didn't like what it was doing. It wasn't keeping up with the Joneses here.
No, yeah.
But now it's looking much more productive.
Where's the 400 again this year or maybe early next year?
Oh,
maybe next spring.
I thought when we hit 100, 120 on Bitcoin or whatever up in that range, then I think Litecoin will be way up there. It'll be up into the $300-$400 range.
It'll start.
I see this year. I see this possibly by the summer or before the summer.
Right.
This 120, 125.
Yeah.
Yeah.
Okay.
And
still percentage-wise, when you look at it, it hasn't performed like Bitcoin.
No.
Well, most of the alts haven't already. Like we used to have this swashing effect where we would see Bitcoin rise and then we'd have a swashing into all the altcoins. It's not acting like that right now. Although
it's not.
No.
Now here's a chart that they might find interesting. This is a swap chart.
Right.
So basically, if anybody doesn't know what it means instead of again taking Litecoin and buying it with dollars, what we're saying is what's the value in Bitcoin? So as you can see here, this is how many Bitcoin or how much Bitcoin it takes to buy one Litecoin. And back in 22, it actually took almost 0.005 of a Bitcoin to buy one Litecoin. And you can see it deteriorated. We did a few trades on it and they did very nicely, but here we lost support here. And once we lost support here, that's when we just decided, you know what, I don't like it as much as I did. So we liquidated, but now it's bottom basing here. And right now it takes 0.00135 of a Bitcoin to buy Litecoin. So you can trade these charts almost exactly the same as you trade the actual chart itself, only instead of being priced in dollars, we're pricing it in Bitcoin.
Yeah. Yeah.
Right. And then the other one you wanted to see was XRP. XRP. Yeah. Okay. So I don't know if I mentioned this. XRP is what I call a pumpy coin. I like XRP for trading. Not a big fan of it for any other reason. There's too many fingers in the pot. Too many people are super bullish. Too many everythings. It's too.
It's contentious. Like I said, there's a lot.
It is. And look at the moves. Look what happens. Up, down, up, down. I mean, vicious moves. And the same thing here. This was our target. Up to the target. Boom. Back down again. We are now in an area where we're being forced to make a move. And as you can see, it's breaking more to the top of this triangle pattern. And once it gets out here a bit, it's going to get a mind of its own. We have a couple of targets over the next month or two. We're looking for maybe $1.25 to $1.50. Our next target is up quite a funnel, which means if it gets here, it's going to rip straight up in the air, up around the 2 to 280, anywhere in that range. And I think that's the last one I got. I don't think there's any more. The Oracle's very stingy with its numbers on this one.
Our buddy Joe, just before, he's hoping to get back into XRP at 20 cents.
At 20? Wow. Okay.
20.
I mean, sure, it's very possible. He might be right. There's broad, very solid support. And here's how it generally happens, JC.
But it could be one of those dips that happens.
It'll dip. Because anyone that's trading, I don't think this is what you call a conspiracy, but anybody that's trading these markets, a lot of people trade it on leverage, and it can be dangerous. The reason most people trade leverage is because they don't want to put up the full amount of money. So in other words, if you buy a Bitcoin, you got to have $70,000 in your account. If you want to buy Bitcoin on leverage, you can do it with 1/5 or 1/10. So you can go in with 5 or 10 grand and buy a full Bitcoin. Now, the problem is if it drops 10 grand, 12, 15, you're long gone. And then it comes back up again. And the guy wakes up in the morning and says, what happened to my Bitcoin? It's gone because it went down, took you out because you don't have any money in your account.
Yeah.
And that's what generally happens. So there's a chance. Here's my thinking. If we do have a debacle in the market, the stock market, because I just this week really paid attention to this. I have a cycle, short-term cycle. I have a long-term cycle on my charts. I don't pay much attention to the outside noise. I'm not really big into the other parts because it just distorts what I believe, and it just adds another layer that I got to get through and start doubting myself if this is going to work. So I got to focus on what I do.
Yeah.
But one idea that I've got is if that something were to happen where either the stock market or the dollar, or we had a black swan event, or there was a bomb dropped, or there was a bank failure, I think everything is going to go in the toilet temporarily. Everything.
Yeah.
That includes Bitcoin, gold, dollar,
silver,
you name it. But what'll happen is the cream will come back to the top. And I've always likened it to a helicopter on a building. And the building is imploded. The helicopter is going, but it's not sitting on the building. And as the building implodes, the helicopter catches a lift and takes off. And that's what I believe Bitcoin will do when the time is right. It will perform when it was meant to perform.
Right.
And I do believe that. So with Joe's comment, I believe he's very possibly could be right. Now, I don't know how low. Like there's major structures here. We'd have to take all these stops out. But yeah, we could have a big spike down on some kind of bad news with everything.
Right.
What you need to look for, guys, and I'll just tell your patrons or your members this. Look for this. See this tail here, this kind of a tail where you got what we call a wick.
Yeah.
Candle. So what happens is it wicks up here, goes up all the way, and then loses it. And it's the same idea here. It wicked down all the way down to here. If Joe had been in here at 42, would have got it. And within that day, it closed back up 20% from where it went down.
Right.
So if we get it, it would be that kind of a move that would come down very quickly into this area. But before it's closed, that candle, it would be back up to neutral. And that would be a great indicator to say, that's it. Weak hands are gone. New money's in the market. Now from here, we head up.
Right. Right. Wow, fascinating analysis. I love it. And Cecile says Martee's targets have been so freaking accurate. Yeah. If you've been watching since the beginning of this Beyond the Chart series, I would concur with Anne Cecile. Martee, what do you have for your audience members here who perhaps want to play this a little bit better and need to educate themselves here on how to trade? What do you have for them here on bullshift2020.com?
Okay, so we're in a bit of a transition, believe it or not. We're having our website redeveloped. So basically, Bullshift I created in 2019 because as a commodity broker for 35 years, I believe that we're in the bottom cycle, again, cycle analysis of the bear market. And sure enough, 3 months later, 2020, if you look at any of the charts, that's when it went in the toilet. And that was the absolute bottom on everything, March 2020. So that's where Bullshift 2020 comes from. Bullshift meaning bullish, bearish. And if you look real close at the logo, believe it or not, there is a bear inside of that bull.
Yeah,
so that was it. So what we do have for anybody that's just curious, and that's what I prefer you do, go to the site, bullshift2020.com, sign up for the free weekly analysis just to get a feel for what I'm doing. Right. Now, if you're more serious and you want something more serious, I offer a thing, and it's called the Market Oracle. Now, the Oracle is the program that we developed over 20 years ago with the professors in South America. That is basically 4 or 5, if necessary, updates, 10 minutes to an hour long, when it's needed during the week, Sunday morning, Saturday night, because cryptos don't close. So, and that's what we do. And there's people, we have quite a few members, but I think they're very, very pleased with what they get. Now, I'm not saying I'm right, guys. All I'm telling you is I show you what the charts say, what the analysis say. And generally, I think you'll find that it's pretty good. But before you do that, go check out the free one and see if you even got a feel for it. We do commodities, 10 or 12 different ones: coffee, cocoa, sugar, cotton, soybeans, corn, wheat, gold, silver, treasury bonds, stock market. That's all commodities. We do options on all of those as well. And then we do the crypto, and we do mining stocks. We're big on a lot of the gold and silver mining stocks as well. And like I said, it's a service that it's not recommendations. It's just what I do, what I feel. It jives with some people. Some people like it, and some people may not.
Well, you can try before you buy. Bullshit.
Try before you buy. Hey, before you go, we should talk a little bit. Yeah. I want to chat a bit about the bridge.
Yeah?
Yeah, very interesting.
You want to put your conspiracy theory hat on?
No, not at all. I don't think it's a conspiracy for a second. And here's why. As we talked before, we say all of this stuff's being broken. We know it's being broken. We know slowly. And we're just waiting every month to see what's going to be broken this month. Because don't forget, I work with the remote viewers full time. You know that, right?
Right.
I see a lot of woo-woo stuff out there, right? And those guys are phenomenal. But the idea is, when I saw that happen, like that Maryland bridge to me means a lot, because being a commodity broker for 35 years, that's significant. That is the biggest harbor on the Eastern Seaboard with regard. Well, for one thing, I looked at some numbers for you. How about this? 750,000 autos imported and exported through that port in 2022. So think about that. They figure it's going to take maybe 4 or 5 years to even get it back up and running. Until they do, the trucks have to be rerouted around. Where's the other places they're talking about here? There's Norfolk, Philadelphia, or the port in New Jersey.
Right.
Time, congestion, cost, all of that is going to add to the cost. And in the beginning, they probably can't even do that. The congestion and all this stuff has to be planned. So you got ships out there waiting to come in. They can't come in
right now.
They got to turn around wherever they go, or go somewhere else. Like the costs and the delays are phenomenal. Now, one big thing, because of the commodities, besides the automobiles, is the grain market. So we're getting right now into a point where we're planting the crops for the Midwest. Most of the tractors, combines, and trucks that they use on the farms and planters, most of those come from there, and they go across country to the Midwest. They're taken over there. So that could really be one of the things, because I personally have been looking for a multi-year move in the grains, starting at any point in time. We're pretty low enough now, but that's why we like to do options, because rather than try and guess this week or next week, we say, look, buy an option. We'll go out to December. We do a spread or a straddle or something like that, a strategy. And you just basically like rolling the dice. You risk $1,000 to make 10. And if you're right, and if people really believe that with the weather situation or the logistic situations or anything else, or the fertilizer, if you think it's a pretty good bet, that's a good way to do it, right? So there could be some major disruptions in a lot of areas. I personally believe there's going to be, because this, I looked at slow motion footage, and I'm sure you did too. That was full steam ahead when they hit that thing. Look at the smokestack.
Oh,
that is not a dead ship.
It seems to be accelerating to the target as opposed to reversing gears.
Does that look like it accidentally ran into that with no power? I don't think so.
Yeah. Well, it was funny, Cliff, in the video. Guys, if you haven't seen it already, I encourage you to go and watch this show, the War Correspondent show from that night. We had 23,000 views altogether live during the show. It was absolutely crazy. But we went through some of this, and Cliff was of the opinion here, for many reasons, that the target of the 4 or 5 years could be at the low end here. We could be looking at way more time, specifically also if we're heading into maybe some hyperinflation, dollar degradation here in North America, and also the geopolitical front. So a lots are going to change here in our market. With respect to the supply chain management there too, like this is one of the critical infrastructure points in the United States. I think there's some psychics out there, and perhaps other remote viewers also, who are seeing that there might be more of these cyber attacks on the horizon. So imagine a second and a third port going under in the same direction, then suddenly it's a massive problem, right? So I'm not fear-mongering, but those are the realms of possibility.
You got to be realistic. That's right. When you plug up something like, say, the Suez Canal or the Panama or something like that, God, look what happened in 2020,
right?
In the Pacific, on the Pacific side. I mean, the cargo, even the cargo containers went through the roof, the price of them, because they were going back empty. Things were so bad. So it's too big of a coincidence just to happen like that.
I remember I was trying to buy a sea can to put some storage on one of my rental properties, and I think typically I would have paid it like $1,100 Canadian here, and they were asking $12,000 for it. I was like, "What?
Oh my God, were they?" Wow.
Yeah. Well, I'm not close to the water too, right? In Ottawa, so typically the sea cans are more expensive than anywhere else, but it was one of those crazy.
Well, that's an expensive one. Yeah, I know that. I saw a couple that I was looking at myself actually for like $4,000 or $5,000. I thought, wow, what happened to them, right? But
was that brand new or a couple years old?
That was old. No, that was
okay. So mine was of the year type of thing. Like it's one of the newer
these were all used. My son was moving and he wanted to store some stuff in it, and I said, buy one of those sea cans. He said, I said, you get one of those $1,500. He goes, you're nuts. They're $5,000. I go, what?
Yeah, they went ballistic there for a while. Hey, thank you so much, Marty. What a great show, man. Just before we go, we have 2 minutes left. I wanted to ask you, is there anything on your radar right now that we haven't spoken about today in the show?
Yeah, the only thing, and this is a bit of fun more than anything else, I always find that we get situations where things generally happen when they shouldn't happen. In other words, like if you notice crypto, when we get usually a correction or a drop, it's usually in the middle of the night when everybody's asleep.
Yeah. Or when the exchange is down for maintenance and you
Really
can't get in.
think about it. This is a long weekend.
Mm.
You know that, right?
Mm-hmm.
And not only is it a long weekend, which I always find, and I'm not saying Tuesday morning or Monday morning, but next week, always you wait and see the things that are going to be, like surprises next week. But on top of that, we're looking at the largest Christian holiday and religious holiday, not just Christian, on the planet.
Yeah.
You got the Nisan 14, all the Christian Easter, all of those, and the Jewish holiday. All of these are coming this weekend, along with, in your case, the solar
eclipse.
Yeah. Right.
Yeah. It's coming. Well, it's April 8th, but it's still in the orbit.
Yeah, that same week, right? It's the week after. That's why I say after that week, after the long weekend. Yeah, it's interesting. So that's the only thing I'm thinking. Wow, what kind of surprises are we going to have when the market opens on Tuesday?
Are you thinking that, because in the last couple of weeks, we've seen like counties in the United States declare states of emergency because of the upcoming eclipse. We've seen the National Guard being upgraded, posted, biological warfare agents being deployed, and all of this. Is that kind of like fear-mongering, or are they using the eclipse for cover for something else they know is happening that could also impact the financial system? Is that what you're alluding to? There's something weird going on
you know
there?
what? Like, I don't go into that area because I don't understand it. I really have my own personal little silly feelings on that.
Right.
But I try not to, because like the stuff you do is really deep, and you get into the woo, and you get into the weeds, and you get into the solar and the astrological stuff. And then the guys I work with, they get into the remote viewing and they go, oh, that's fascinating, but I don't understand it.
Yeah.
But I know a lot of people.
But your gut feeling next week could be a critical week either way.
Yeah, it could be something big will pop next week. And I have a funny feeling by next week, something more will come to light about this bridge issue possibly as well, right?
Well, that was the one thing Cliff was saying in the show too. We don't know yet all the
you don't know yet
consequences.
That's right. That's why they'll call it a conspiracy. Wait and see, too big of a coincidence. I mean, we're waiting for the next shoe to drop. Okay, the biggest port on the East Coast, that might be it. Right. We're cutting the north off from the south again, right?
Exactly. Exactly. Wow. Thank you so much, Marty. What a great show, guys. Go check out Marty here at bullshift2020.com. Of course, you can try before you buy. I love you guys. We'll see you again at 8 o'clock Eastern this evening for the next Beyond the News show. Yes, at 8 o'clock. And we have a special guest coming up for that as well, so you don't want to miss that. I'm Jean-Claude, Beyond Mystic. I love you guys. Have a great day, and we'll see you later. Au revoir.
Take care. Bye-bye.
Bye.